One asset class, which is the real estate space. We have the festive season, which has sparked a surge in the Mumbai real estate registrations. According to Knight Frank, during Navratri this year, property registrations have surged 37% in the city of Mumbai. Gulam, who's the Senior Executive Director at Knight Frank, joins in to discuss this and the outlook for the real estate space. Gulam, hi, welcome to the show. Well, you join us on a day where there's a lot of uncertainty which is taking place in the equity markets. There is a possibility that rates could be higher for longer, and that probably doesn't bode well for the real estate space. While we've had great registrations, in the past couple of days and maybe in the month gone by, what is the outlook according to you? Do you think that there could be some amount of negativity creeping into the real estate market simply because of the uncertainty we are seeing globally now?
Well, I would say, there is always a lag period between, your macro indicators that you're talking about and impact thereof on real estate. Because somebody who's buying an apartment today has actually collected or, put together the finances over last maybe a couple of months. It doesn't happen overnight. So the impact of these concerns that you're talking about may be felt over a period of time. But whatever said and done, right now, we are in the middle of the festive period, and that's exactly the point we are driving across through that note that we shared across, is that the number of transactions that we saw just in these 9 days have been, absolutely spellbinding. There's something which we never expected. And that is what is giving us some comfort to say that at least for another, this time with Adhik Maas also coming in, Diwali has gone into November. So mid of November, we will continue to see the festive fervor continuing. And that is what is giving us comfort at least a month and a half or so. We shall see this going on. And that is where now talking about whether it is a global concern you're referring to or the stock exchange issues that we're facing for last day or two, whether it will continue for a month and a half later, time will tell. But as I said, in the interim, everything is looking good.
Okay. Can you give us, in the interim, everything is looking good? That's, I think, important, right? Nobody knows what's going to happen 1 year from now. So who cares about that? For now, these registrations, 3,231 registrations in Mumbai. Can you give us some more color on this? Where has it come in from in terms of, both pricing? Is it in the affordable space, premium space? And what is the big takeaway, the big trend takeaway that you're seeing from this?
Look, the share of the luxury transactions at the overall number is still, in any case, very less. It would be, if you're talking about 10 crore plus kind of apartments, those apartments would be not even 5% in the overall numbers. So I would say what is driving the real estate, at least at this stage, what is visible, is mid to low end of the market is adding a lot of numbers. It doesn't mean that the luxury is not selling. Of course, luxury is also selling well, but the sheer number of that in the overall scheme of things is very, very less. So the impact may not be really realized or felt. What is driving, as I said, that category of below 4 or 5 crore of apartments are selling like hotcakes. And while earlier there were some concerns that the affordable section all over the country was suffering, in Mumbai, even that segment was almost half. Like when you're talking about Mumbai, we feel below 50 lakh is something which I would call affordable. Number of transactions below 50 lakh were also as much as 50%. And that is something which is continuing the number of transactions in MMR region. So just to answer your question simply, it's pretty well spread all across the sectors. Super luxury or the higher end, while it is very small in numbers, but still there is visible impact on that segment as well. And when I say impact, I'm talking about positive impact. Lots of transactions still happening in the upper end of the market.
All right, Mr. Zia, finally, before we let you go, just a couple of investment ideas for some who would have made some money in mid-caps and, have booked those profits. Where in, the country should they put the money in real estate? Should it be cities or should it be satellite cities? Should it be land? Your thoughts?
Well, for a long time I've been saying so. Residential real estate is not for investment. Like if you want to buy a house and wait for it to double up in next 4-5 years, I would say don't touch residential. And that, of course, gives you the opportunity to look at land. But land comes with lots of risks. It's a very high risk phenomenon. So because you have local regulations, etc., coming along while you're buying the land has high risk and hence continues to give you better returns. But that said, at least one thing I'm clear, I would never touch home or buy a residential apartment as an investment vehicle for sure.
Okay, all right. Thanks a lot for that. I think that is a very, very wise statement. So if you want to live in your home, of course, go ahead and buy it. But as an investment vehicle, perhaps you'd want to rethink. There are many other options that will give you better returns. Got that, especially in a market, a saturated market like Mumbai. Let's take a quick break on that note. On the other side of the break.